Y'all ready for some real talk? 72% of retail traders who buy a stock right before earnings end up regretting it within a week. That is a stat that should make your coffee come out your nose. The United States market is not your buddy. It is a casino with better lighting. And earnings week is when the house turns the music up and waits for us to make bad decisions. Let me tell you a story. Last year I bought 100 shares of X stock 2 days before their earnings call. I was feeling myself. I had watched 3 YouTube videos. I read a thread from a guy with a rocket emoji in his name. I was convinced I cracked the code. The stock was at 182. I thought it would hit 200 easy. Earnings hit. They beat on revenue. They beat on EPS. I was already planning what color Tesla I wanted. Then the CFO opened his mouth on the call and said 2 words, supply chain. The stock opened up 5% and closed down 9%. I went from up $900 to down $1,600 before I finished my breakfast burrito. That was my rent in Ohio. That was painful. That was tuition. And that is why we are talking about reacting to earnings with micro positions. Not predicting, not gambling, reacting with tiny little positions that keep you in the game instead of sending you to the shadow realm. So let us break down what most people get dead wrong about earnings and how micro positions fix it. I am giving you 6 specific secrets today because 5 was not enough, and we are not doing bare minimum energy on this channel. First mistake. People think you have to be in before the print. That is like marrying someone because you like their dating profile pic. You have no idea what the vibe is. Earnings in the United States are a 2-part show. There is the numbers released, and then there is the call. The call is where the real damage happens. Guidance, tone, analyst Q, and A. That is where CFOs accidentally nuke the stock with corporate speak. When you run micro positions, you can wait. You can watch the initial spike or dump. You can hear the call. You can read the transcript. Then you decide. I started taking 5 to 15 share starters after the dust settles. It feels slow. It feels boring. It also feels like not losing my mind. You get to see if the move is real or if it is just algos chasing headlines for 10 minutes. Big positions force you to predict. Micro positions let you respond. And responding is how you survive. Second thing people mess up. They worship the headline beat, EPS beat, revenue beat, stock up. Simple. Except it is never simple. The market trades on expectations versus reality. If X stock was expected to grow cloud revenue by 25% and they only grow by 22%, that is a miss, even if the total number looks pretty. Wall Street will throw that stock in the trash so fast. I have seen it beat on top and bottom, then down 12% because free cash flow was light. The average American investor does not even know what free cash flow is. They just see red and panic. Micro positions give you the buffer to learn this stuff in real time. You can sit with a small position and study why the stock is moving weird without your palms sweating. Rhyming on rent. You're not managing a crisis. You are watching a case study. That is how you level up. You pay small tuition and get big lessons. Third secret, position sizing. Y'all are out here trading like you are Ken Griffin. Buying 100 shares of $150 stock is 15 grand. That is a down payment. That is a used Camry. That is crazy for an event that is basically a lottery ticket with extra steps. I know because I did it. I felt like a big shot. Then I felt like a cautionary tale. Micro positions mean you risk what you can emotionally afford to watch get weird. For me, that is 5 to 20 shares on most names. If the setup is A+, and I have done my homework, maybe I push to 30. But I am never in a spot where one bad report means I am eating ramen for a month. The United States market will be here next quarter. You need to be here too. You cannot compound if you keep blowing up. Micro keeps you compounding. It is not sexy. It is effective. It is like lifting lightweight with perfect form instead of tearing your shoulder trying to bench 3 plates on TikTok. Fourth thing, people ignore options flow and institutional footprints. Then they are shocked when the stock does the opposite of what makes sense. Bro, the big money leaves receipts. If you see massive put sweeps on X stock the week of earnings and the stock is grinding up, that is not bullish. That is a trap. That is the market setting the picnic table for you and then stealing the basket. I'm not saying you need to be a quant. I am saying open a free flow site. Look at the unusual stuff. Look at dark pool prints. If you see a $10 million seller at 3:59 p.m. the day before earnings, maybe chill. With micro positions, you can use that info to decide to sit out. Cash is a position in America. We hate sitting out. We think we are missing money. You're not missing money. You are missing drama. I would rather be bored and green than entertained and broke. Fifth secret, your brain is your worst indicator around earnings. You are biased. You are emotional. You are dopamine chasing. When you have 100 shares, every tick is personal. You start seeing patterns that are not there. You hold because you do not want to be wrong. You sell because you cannot take the pain. You are not trading the stock. You are trading your feelings. Micro positions are like emotional armor. When I am only in 10 shares, I can actually follow my plan. If it breaks my level, I cut. No hesitation. If it holds and goes, I add. No ego. I am not married to the trade. I am dating it. And if it gets weird, I leave. No alimony, no custody battle, just a small L or a small W, and I move on. That mindset shift alone made me more profitable than any indicator I ever bought. Sixth thing nobody admits. Most retail traders have no post-earnings plan. They buy before, then they pray. There is no if this, then that. With micro positions, your whole game is the post-earnings plan. My playbook is simple. I wait for the print. I wait for the call. I watch the first 15 minutes of next day price action. If X stock beats and holds above pre-market lows, I take a starter. If it reclaims volume-weighted average price and the sector is strong, I add. If it fails and the guidance is trash, I am out, or I do not even enter. I set my risk on the starter share amount. My stop is clear. My target is the gap fill or the next supply zone. It is boring. It is repeatable. It works in the United States market because the United States market loves to trend after earnings. The big move is often day 2 to day 5, not day 0. Micro lets you be there for day 2. Let me hit you with a relatable analogy because that is how we do on this channel. Trading earnings with a huge position is like chugging a gallon of milk on a first date to impress someone. It is bold. It is stupid. It is going to end badly, and everyone will remember it for the wrong reasons. Micro positions are like sipping the drink. You taste it. You see if it is spoiled. If it is good, you order another. If it is nasty, you push it away, and you are fine. You do not have to call an ambulance. You just do not order milk again. Same with stocks. Test the tape. Do not marry the tape. Here is my personal stake. I am not a hedge fund. I am a dude in the Midwest with a laptop and a dream. I tried the YOLO route. I made money fast. I lost it faster. I had months where I could not look at my brokerage app because it gave me anxiety. My sleep was trash. I was snappy with people I love, all because I thought I needed to be big to win. When I switched to micro, everything changed. My account stopped looking like a roller coaster. My head stopped feeling like a casino. I started stacking base hits. $20, $40, $100. It adds up. I am not buying a yacht. I am buying freedom. I'm buying the ability to keep showing up. And in this game, showing up is the edge. The United States market is a marathon. Micro positions are the pace that keeps you from blowing out your knees at mile 3. Now, some of you are thinking this is too slow. You want to turn $500 into 50 grand by Friday. I get it. We all saw the screenshots, but you did not see the other 99 screenshots where the account went to 0. I would rather be the tortoise with a green month than the hare with a blown account and a sad Twitter thread. You can get aggressive once you have skill. Skill comes from reps. Reps come from surviving. Micro is how you survive. So here is the question I want y'all to fight about in the comments. Is trading earnings with small size a real strategy for building wealth, or are we just lying to ourselves and we should all buy index funds and go outside? I want the debate. I want den fitte gjør den kite spas by tag your most stubborn friend. Tell me why I am wrong. Tell me why I am right. I will read every comment and I will pin the spiciest take. If this hit home and you are trying to build a micro business around trading without losing your sanity, do me a favor, hit that subscribe button, turn on the bell. We drop new videos every week, breaking down real trades, real mistakes, and real ways to get better. No Lambo thumbnails, no fake guru energy, just straight talk from someone who learned it the hard way, so you do not have to. We are in this together. We are getting smarter. We are getting calmer, and we are getting paid. I will see you in the next one. And remember, react, do not predict, stay micro, stay alive. Let us go make some money without the ulcer.